Greetings, this is Jeff Scott. It is 9:41 on the 19th, which is Sunday. Obviously at 9:41 a.m. futures are not out, so I'm basing this on end of day on Friday. I've entitled today, Topping is a Process. You know, all you gotta do is watch any of the talking heads on TV, all the experts about how far this market is run. Clearly we are due a correction. I don't think I disagree. The problem is topping is a process, and by that I mean that it can take weeks or months to put in a top, where bottoming is often an event, V-shaped bottoms, etc. And so I don't question that we're topping. The problem is, as I said last week, and I'll reiterate again this week, I've lost more money anticipating a top and starting to go short early than I probably saved myself by having protection in and buying puts and short positions at a top. So what does that mean? It means wait till the market gives you a signal that it's really turning over. Don't anticipate, don't overdo it to the short side, because all it takes is a tweet and the market goes up or the market goes down. It's a little risky here. Disclaimer, this is education purposes only. I'm a doctor, not a broker. I am not registered as an analyst, financial planner, or any certification. So anything I recommend must be considered in the spirit of education and not investment advice. I am independent. No one pays me to say good or bad things about them. Every tool that I use, I've paid for. I look at my trading as a blend between I hate to use the word fundamental, so I'm going to use a structural foundation built upon CanSlim as taught by O'Neill, improved by Morales and Catcher, taken to the computer originally by Ian Woodward and Ron Brown with highgrowthstock.com, and then with a good trading etiquette, learning how to trade, manage your money, when to take the trade, when to get out, from John Person, friend, mentor, teacher, trader. Started the options exchange when I was in med school, and great books, and he has got great indicators for TradeStation, one of which is also built in, or a couple built in for free in Thinkorswim. Bantharp, sort of the god of position size and money management. This is my buddy George Lee. And just a quick note, George and I will be holding a trading seminar this coming weekend in Orange County. I'll have a slide about that in a second. I own a lot of programs. I don't need all of them to be a successful trader. What I need is a trading platform, of which TradeStation or Thinkorswim work for me. I like Genesis, but most people here don't have it. HGSI is how I find the best program to do my analysis. I like to have something on my computer, and it's an all-in-one platform with end-of-day and real-time delayed updates, intraday charting, scanning, ranking, etc. EdgeRater is a nice add-on to HGSI. It allows me to automate some of the tools and things that I did in the past that might have required going into Excel spreadsheets. I am a fan of seasonality, and there's a number of websites I use. Speaking of website, this is the highgrowthstock.com website. I have nothing to do with this except I'm a user and friend. I get no commissions, bonuses, free goods based upon the number of people that buy the product. And again, I'm not paid to do these programs. If you go up here, it says free 30-day trial. Free means free. They don't even ask for a credit card. And under investing strategies, you'll see my name as well as Ron Brown and others. And many of us have a large number of videos to help you learn how to use the program. Stock patterns are cyclical. And as I said last week, and probably would not say any different this week, we keep living up here where just as it's ready to sell, we take another leg higher. And as I said, you have to anticipate. I agree with that. You have to be positioned, but you can't be making a lot of trades that are counter to the trend that we're in, i.e. turning to a short position after this multi-year bullish position without getting evidence that this bull is over, because it just keeps tricking you. Therefore, since we're in this uncertainty time, I've raised cash to smaller positions. I've sold some premium. I'm still net long, but I was a whole lot more long on November 10th than I am today. Here's that workshop this weekend. It's a Saturday, Sunday, Monday program. Holiday Inn, Orange County. The place to go is, here's Greg Mills. Stop this if you want to go and write this down. His cell number and his email. Greg runs this meeting. It's George, myself, and Chris White from Edge Raider. It should be a good meeting. We've done these twice a year for years. The good news is the same people always come back, which is a positive. The bad news is the same people always come back, and we'd like to get some new people. So I know there's some seats available. I start with my sector review. So you notice here I've added the NASDAQ 100 and the S&P 100, and they're about 50-50. You look through, the financials are all red, whether you look at big banks, regional banks, insurers, broker-dealers, and credit cards. I'll tell you, the other thing that was weak this week was biotech on Friday, and healthcare in general, as it seemed to rotate out. Utilities rotating in. I always like to get a sense of what the market's doing. I run this during the day, and I'm constantly looking to see if there's any industry group that seems to be being marked up, especially when I start to see everything going up 2 or 3%, because then I as I learned from John Person, that probably means the hedge funds, the institutions are going into that sector. If I look at the market, so here's sort of my comment about wait till this thing rolls over. We are in PPS buy signals. I'm just making sure on all 4 major indices. This is the E-minis, the NASDAQs, the Dow, and the Russell futures. And if I look at them very quickly, they're all either at or above the 17-day, they're above the 50-day, and they're way above the 200-day moving average. That's how I categorize an uptrend. And even the Russell, where the other markets were kind of flat this week, the Russell actually outperformed and closed above the 17-day moving average. The VIX remains in doldrums, and the dollar has sold off, which is probably helping Russell and other stocks. On the weekly, again, how do you short this market? Yes, this market is extended. Yes, the markets run a long day. And the thing that's most interesting to me here again is this big move up on the Russell this week. Low VIX, and dollar failing at the 17 weekly, 50 daily, and probably heading down towards the 50 weekly. So again, tired, long in the tooth, absolutely couldn't agree more. But wait till you get actual signals that the market is failing. Don't think just because it's run a long time it's going to fail. And then this is sort of my reality chart. Reality in that it goes back quite a long time on the bottom. The first, did I not? This should be daily. Yep. Top daily, middle weekly, bottom is monthly. The first column is the E-minis, then the NASDAQ futures, then the Russell futures, the NYSE, and the Dow. So the first thing is, again, buy signals on dailies throughout, buy signals on weeklies, except for the Russell futures, which are close to triggering a buy signal weekly, and the monthlies are up. So we have, right now, short, intermediate, and long-term, all the indexes are going up. Again, we are long in the tooth. Yes, I agree with the talking heads. There will be a correction at some point. I just don't know when. Could be this week. Part of why I think the market is doing better and some banks are not doing well is that the rates actually came back down. And these are sort of my lines in the sand that have been there for quite some time. And you could see the rates have fallen down to below the lines in the sand on both the 10-year and the 30-year. If I look at the AD lines, yellow represents the S&P 500. It's turned up. You can't really see it real well, but white, representing the AD lines of the Russell 2000 and the 1000, is actually turned up. So you have AD lines continue to move higher. That's not what I expect to see if this market's about to roll over hard. Not to say that it's not, just don't know when. Breadth improved. Stocks above the 40 and above the 200 are in the middle of their range, certainly not overbought or oversold. And the 3-month new high, new low made a big rebound. It did a turn last week. Here's where the reading was last Sunday, and you could see it's moved up quite a bit. Why is this important? Well, this is very bullish when it's going up, but when it gets up to this white line, which it's hit multiple times, it's usually when the market gives back some. So we still have some room. So clearly not an overbought market. The daily McClellan continues to go higher. I'm bothered by the fact that the Both the oscillator and the summation index on the daily and on the weekly are making bearish divergences, so less and less participation. Interestingly, the oscillator actually got back above zero for the first time. Well, not for the first time this week. We go back on the daily, you can see it was below zero for most of this month. Current buckets, this is sort of a middle. Again, not an overbought, not an oversold, not a clear-cut buy or sell signal. Half the stocks are above the midline of their S&P 1500 Bollinger. In the S&P 1500, half the stocks are above the midline of their Bollinger Bands, about half are below. We got about 7% of the stocks are above the Bollinger Bands, 2% below. That's a neutral reading and not one that gives me a whole lot of clues. I looked for Hindis. Last week I commented that we had a number of days where 3 out of 4 of the signals were positive, both on the traditional NYSE and on the Russell 3000 here. Not sure, I've not validated the Russell 3000. I use it as sort of a interesting check on the NYSE and to see what happens. But that eased off as the week went on, so there's no Hindi. Market tone, clearly in a neutral perspective with everything being yellow, which beats having red. Sectors are weakening. We have the staples. We have, let's see, we get these right, financials. And we have industrials, I believe that have turned red. So we clear-cut weakness in certain industry groups. Notice there's no green on the industry groups. If I look at my canaries in the coal mine, this would sort of be counter to most of the other stuff I've shown you, where they're stalling at new highs, but note new highs. They had multiple pocket pivots on the index last week. So this is interesting. This is something that usually leads the market, and they have not rolled over. Put that in the why I'm not shorting the market camp. Know your news and earnings. As I looked at this comes from Bloomberg on the left. I don't see a ton of market moving. We've got a number of Fed speakers, Charles Evans, John Williams, Bullard, Evans again, Kashkin, Kaplan, Janet speaks, George, Master, Rosengren. So we got a lot of Fed heads speaking. That can always move the market. It was interesting that they raised it 25 basis points. They didn't indicate that they were increasing the number of anticipated moves. They again talked about data dependent. And the funny thing was they weren't even unanimous. There was some dissent. One person dissented about raising it as all. Hence, rates came down as a more dovish tone, and banks and bonds went in opposite direction. Earnings, not a big earnings per share week, just like not a huge news week. And on the news, just pointing out, we got our Baker Hughes rig count. We got some durable goods. On Thursday, we've got some employment numbers somewhere in here, I suspect. Jobless claims. But all in all, not a very busy news week. As I always say, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. The S&P was up only 0.24%. Russell was up over 1.5%. Gold, silver, semis are leading with the weak dollar helping gold and silver, and growth stocks outperform on the week. I'll show you how I know that in a second. Despite rate increases, dovish talk by the Feds lead to dollar easing, rates falling, bonds firming, and banks falling. Market paused to refresh as healthcare rotates out of leadership. We'll see if that's a one-week wonder or a trend. Will a Trump rally fail as repealing Obamacare struggles in Congress? Maybe it's not struggling, according to what I heard this weekend on the news, that perhaps there'll be some changes to appease those that are against it on the Republican side. A bigger concern is, will delays in regulatory reform and taxation lead to further weakness in money center banks? I think that's a possibility. And as talking heads talk a market top, will the market rise to new highs before sell in May takes over? My guess that may happen. Bottom line, we will roll over eventually as we're getting an extreme duration of a bullish market. A third Fed rate hike, which we just had, often leads to market challenges, yet we are still low and overall easing compared to long-term norms. We are not overbought after the last couple of weeks. We've had no Hindies, thus I remain long, but have cut back position numbers, rolled profitable option positions up and out, and trade the market we get, not the one anyone tells you should get. Say a word about rolling options up and out. I like playing deep in the money options. It's a cheap way of buying a stock. Your stock goes up, your option becomes deeper in the money, and when it comes time to rolling it, there's almost no risk premium. It's all the intrinsic value. And so rolling deep in the money options is cheap, cheaper than owning stocks, and I can sell a deep out of the money call to pay for that rolling the option. The problem with deep in the money options is that when the market rolls, you get a round trip, and you could actually have a deep in the money, highly profitable option end up losing a lot of money because of the last trade. So I roll my options up, which means if I have, say, a Broadcom at 180, and now Broadcom's at 224, I'm going to move my strike price up to 200 or 210, and that way I'm pocketing those profit dollars. And if it goes back to 180, I may lose some, but I still would have put a lot of money in my pocket. If I kept the 180, it makes my options rolling very cheap. But if the market rolls over, I give up my profit. So especially at times like this, rolling up profitable options positions makes a lot of sense. Now I mentioned, this is a typical agenda, top-down review, a little bottoms-up kicker onto the charts. One of the things that I run in HGSI at the end of every week is to look at performance. So I look at, what I look at. These are a lot of different indexes that I put together in HGSI. So somewhere in the middle here, I find my stocks a little bit more up than positive. I was up about 1% on the week. All right. I compare myself with the S&P 500, and I find the S&P 500 was up 0.24. I'm happy if I'm 4 times the S&P. Now, then I look at the stocks, my new buys, and my new buys were also up about 1%. My filtered buys, where I apply some of John's techniques, were up to 1.6. And notice on my filtered buys, 13 out of 15 were positive. Then I look at what groups were leading. Bible Gap's up, best, a lot of Woodward and Brown groups. So these are HGSI type stocks, clearly leading. Pullbacks look good up here as well. I get down here, the IBD 50 and the HGS 100 were both up 1.42%. And my GIF All-Stars 1.39, Market Smith 1.35. So across the board, my growth indexes topped the S&P. And when I look under here, small stocks did not do well. Interesting, best of Woodward and Brown was down 1.79. This is a shorting scan, so if it's down 0.85, we'll bid up. So what do I learn from this? I learned that this was a good week to be in non-S&P 500 stocks and growth stocks. That's it. So it tells me what's working, what's not working. Next, I like to jump into TradeStation. And in TradeStation, it's funny, I get a lot of, I started this as just for my own personal, I haven't really validated it, but other people are starting to copy it, which I think is fine. It just gives me a sense of where the markets are, and I call it my 5-point test. Point number 1, green person buy, red person sell. Am I in a buy or a sell? I'm in a buy. Point number 2, color of the paint bar. Blue is neutral, green is bullish, red is bearish. These are an elder impulse indicator, so that's neutral. Point number 3, am I above or below the auto envelope? Because if I'm above or below, I know I'm not staying there very long. I can track the top for a long time. I don't usually close above it. Not happening, so that's bullish here. So where am I from the perspective of these dots? These are MACD divergence, which can be bullish or bearish. If it's red and on top, it's bearish. I don't have any on the daily. And where am I on the high jump bar at 77%? That tells me where it was in the 90s a couple weeks ago. I have come off of a overbought period. So I look at the E-minis, and I'm going to give it better than neutral because it's green here. The rest are kind of neutral. The weekly is in a buy signal, but it's blue with MACD divergence. The monthly is strong. So the E-minis are more positive than negative, but a little concerned about the MACD divergence there, which you can see can go on for quite some time. The YM, the Dow, a new buy signal came in on Wednesday, 73%, same story here. So again, more positive than negative, but still some concerns with the blue and the MACD divergence. The NQ100s, been in a buy signal for a long time. Blue buy. Again, now down to 86%. So working off some of the overboughtness, more positive than negative. Then I look at the Russell 2000, which had a new buy signal. That's the strongest looking move of the week. But notice weekly it's been in a sell signal, though it went to blue here. So weaker on the intermediate term, but certainly firming up short term. So overall, these four indexes all look like they firmed up over the last week. More positive than negative. They've come off their overbought stature, and so I can still be bullish with some caution. If I look at the dollar, you can see the dollar is selling off. It's in a person sell signal with a red bar. Red weekly, although still monthly it's positive. If dollar is weak, then you might expect oil to perhaps strengthen. Oil's in a sell signal on daily, weekly, and monthly. Oil remains weak, and I'd like to see it move up more before I would start to reconsider it. Obviously, within its trend, it's near the lower part of the bar, but it's been down closer to 40 before it rebounded the last time. If I look at yellow metal, I can see it had a buy signal on Thursday, still in a weekly and a monthly sell signal. Gold has had some pressure on it this year. And then lastly, if I look at the VIX, you can see the VIX remains in a sell signal, which is good for the market. Here's that bullish divergence, which eased off this week. It's in a sell on all three. So right here, the market is, again, just to summarize kind of where we've been, it's not that weak. It's not so strong that's obviously overdone either. Yes, I expect a rollover, but I don't see anything here that says it's imminent. But as I've said multiple times, all it takes is a tweet. We want to look at the industry groups real quick. Healthcare weakened this week, and I think there's an arrow there. Let me see if I can pull that down. Oh, let's see. Yep, there's a sell arrow came in on healthcare this week. So healthcare rotated out. You can see it turned down here on strength. It was up close to 100% last week, no shocker. So short-term weak, still in a longer-term buy signal. So healthcare rotating out this week. We'll see if it rotates back in. Financials, don't know what to make of this bar, so let's look at FAS and see if it has the same bar. Financials, also on a sell signal. Longer term, they're in buy, short-term sell. Discretionary, short-term buy, 86%, long and intermediate buy. Technology has been strong. You can see it's been in a buy signal since early February in all three time frames. Industrials, although Edge Rater showed some weakness, they are in a buy signal daily, weekly, and monthly. Staples, a new buy signal, a sell signal came in on Friday. Materials in a buy. Utilities in a buy. And energy should be in a, they had a buy come in on Wednesday, longer term sells. So just gives me a flare of the market, what's working, what's not working, and then I flip out of this. I go into HGSI, and let's just take a look at some of the indexes. So I'm going to go into Major Markets Plus, which is one of the things that comes in the Brown and Woodward update. And I'm going to go down to T1, which is all price and volume, heavily weighted towards one day. I'm going to sort by raw combo and see that small mid caps, NASDAQ, Russell come to the top, transports, biotech, industrials, 100s and 500s towards the bottom. Small stocks in vogue, as I already said, growth more in vogue this week, and weakness in some of the larger instruments. Let's take a look at these very quickly. I'm going to start with my cleaner view here. So I'm just going to go over this very quickly. The top paint bar is a weekly and a daily bongo. That is a homegrown buy-sell indicator developed within HGSI by myself and several other friends. I like to be long when the weekly is green. I don't like to be long when the weekly is red. It is a slow indicator, but can be used for timing ETF buys and sells. In the setting of a pullback, the weekly remains long and the daily goes red. The next two here are the Hindenburgs. The Hindenburgs, which we don't have one and haven't had one this year, are an indicator that's been around for decades, and it sort of is an indicator that's been associated with all the major corrections for 50 years, and it sort of signifies a top where the weak hands are buying and the strong hands are selling, and there's a lot of volatility. We don't see them. And again, for those that have been here before, I apologize, but I think it's worth its weight in gold in showing you what happened in 2007, where the Hindenburg fired multiple times, and again in 2000 and later in 2007 before the market turned over, and we could go back into all major corrections since the 50s at least and see the same pattern. So I leave this big view here so I can remind everybody that had you been smart and went long the market on, in February at the bottom in 2016, forget the March 9 bottom, but had you been long this entire way, you would be up 31% on a year and 1 month. That's a huge run for the S&P 500. And people have been saying the market's going to roll over this entire way up. Let's take a look at it on a shorter term basis. What do you see here? You saw a kahuna come into the market on Wednesday. We're still within the realms of that kahuna bar on the Thursday and Friday. This magenta is the 8-day, green is a 17 simple. 8-day exponential moving average, 17, 50, and 200 simple. Clear uptrend. Yes, it looks like it's getting extended, but it's still holding above the 17. I call that a minor pullback. This hasn't rolled over yet. The Dow. Looks the same way, not much more to say about it. The NASDAQ. A little bit stronger. It's above the 8 and the 17-day. And notice that on all of these, the weekly bongo's been buy since November, and the daily bongo has been showing the evidence of this pullback here. Big volume on Friday, probably index rebalancing. And then the Russell 2000, and you can see it's had a nice move up to get above the 17, although it's still in a weekly bongo sell. So I look at those four indexes. How can you say the market's going to roll over? You have long bulls, probably tired bulls, but you're above the 17-day in all major indexes. I'm more neutral than bullish, but it's hard to be bearish yet. Want to be bearish? Let's look at some things like the dollar. The dollar had failed at the confluence of moving averages. Notice the dollar's been in a weekly bongo down since mid-January. Dollar has to get above the 50 and hold before it's meaningful. Volatility, let's talk about beaten up. And you can see the volatility is as low as it goes. Obviously, it's not quite as low as it goes, but it's pretty low. And it's been in a sell signal going back to the beginning of this year. Gold, you might expect it to have rallied with the dollar week. It did. More importantly, it finally turned green on the weekly bongo. I still think it's going to be range bound between the red and the blue, the 50 and the 200-day moving average. But I'm going to watch gold, especially if the dollar weakens. Silver, not quite above the 50-day moving average and hasn't turned there. So again, reinforcing that this has been a super strong market. It's sort of going sideways now for a number of weeks. It feels like it might be starting to top, but that doesn't mean it's not going to have another leg up. And therefore, I'm careful about how negative I'm getting or sounding. I've got 172 groups in HGSI. If I just look at those with upward momentum, I've got 58. And what I like to do is take, as a top-down investor, look at the top ones there. For comparative sake, to the downside, 23. So diversified banks, big banks, got hurt by the somewhat dovish turn of the bull, as did investment managers, steel raw materials, institutional brokers, precious metals, large pharma. Biotech fell out of strong, hasn't made it to this list yet. But where the momentum is here. And let's take a quick look. Semiconductor devices. The big leader has been NVIDIA. Now I'm going to add something to this view. I'm going to add some things that matter on my stocks. So still have the bongos. Now I have accumulation distribution, a 13 and a 2-day force, high jump bar that looks for extensions like hitting the top with the red candle high as a signal that the market's going to sell off. Then I have Bible gap up, followed by yellow as a squeeze, then mobile breakout or breakdowns. This is the industry group in dark gray. Same moving averages, the PSAR reversal signal, Wilder PSAR. In this bar here, we have pocket pivots as described by Morales and Katcher. Here is on-balance volume with a moving average. And then in this bar, I'm looking at regular volume and looking for kahunas. Kahunas are momentum. They're a big move, outside move within the Bollinger Bands. And phoenixes, Eureka in green and Phoenix in red, those are sort of the follow-through days in the market. And they are analogous to the William O'Neill follow-through days. Blue and green are good, red is bad. The ultimate buy signal, frankly, is a stock that's breaking out, Bible gap up out of a squeeze with a mobile breakout, and a kahuna occurring a couple days after a eureka in the market. But that was then. Let's take a look at this now. Give you a little bit more. So what you have here is, this is, as you all know, NVIDIA has been a leader in the market. It's had a huge uptrend. It's pulled back. It's retaken the 17-day weekly, which is about the same as the 50 daily. To me, it looks like it wants to go higher. But before I would buy this, I'd probably set a buy stop above the 50 and wait to see for it to move there, perhaps with some momentum. But NVIDIA looks something interesting again. Acalero sold off as well. Broke above the 50 with a mobile breakout. Looks interesting here. AAOI, similar pattern. This is probably one I'm interested in playing more than the other two. Look at the earnings per share growth on this. This one looks interesting. All right, so that's semiconductors. The next group I'll look at are banks. These are regional banks. Now, most of them are below the index, which to me is a warning sign. This is probably the strongest one of the bunch, and it's $200. As you see, it had a PSA reversal coming out of a squeeze and a mobile breakout, a pocket pivot, and huge volume on Friday. I suspect it had some rebalancing maybe into the S&P 500. I would look at the volume. The volume on the stock on Friday, just to give you a clue, was 2,520,000, and on typical days it's 500,000. So at 5 times the volume. I might look at KRE, which is the regional bank ETF, and what I'm going to see isn't as pretty. It's sitting on the 50. It's in a position where with a little momentum I might get excited. And as you look through the stocks in the regional banks, most of them look like that. They need some push. REITs did show some energy, especially those that are not tied to retail. This is a real estate ETF in Alexandria, REIT. Pull back down here. It's a little bit deep for my taste. Again, another one with rebalancing with huge volume. I'm assuming it's rebalancing. I might be wrong, so let's go quick info from Web, FinViz, and see what it says. Yep, got added to the S&P 500. So that's what the volume was there, but really not much on price. I'm not liking the pattern. There are some that I did like. Here's one I do like. American Tower pays a 2% dividend, huge earnings per share growth, breaking out. We'll look at these later when I say my stocks of the week, but you could see a lot of these are being artificially driven by rebalancing. Acacia on the telecommunications had a very good week. You know, is this done going down? Who knows? I certainly don't know. But, you know, if you're a bottom fisher, you can look at this. The problem is it's been in a weekly bongo red ever since it topped. It's below its major market, the 200 and the 50, although it broke above the 17. It looks constructive down here. It had 2 up days in a row. Not that that's that meaningful. You look at the weekly. You know, do I think this is reversing? I think it might be, but it's certainly a high risk buy here. Put it on a watch list. See if there's anything else I like here. I mean, so many things have been beaten up as individual industry groups have been clobbered. Telecom carriers, well, there's something to like here, and there's something to like here is a dividend. So here's Verizon, you're buying it, sort of in the middle of its range. It must have had rebalancing, had good volume on Friday, and it pays a 4.6. CenturyLink, low in its pattern, pays a 9.1% dividend. T-Mobile, nice uptrend, doesn't have a dividend here. Mobile Telesis. This is one that I found interesting. Don't know anything about it. I think it's a international carrier. Bongo turned green. Had a Bible gap up on Friday. This is a high close doji as well. Had a Kahuna. Has a 6% dividend. So look at it on a weekly chart, and you could see it's trying to move back. It's going to have resistance here around 13, but I kind of am curious about this guy, especially, I mean, 13 is still 20% away and it pays a 6% dividend. So I'll be watching Mobile Telesis. And AT&T, we talked about it last week, I think coming off its 50 also pays a 4.6% dividend. Application software, Adobe had earnings, I believe, on Friday. And you could see it had a Bible gap up. Do I chase this? I mean, there are specific rules for trading a Bible gap up. I don't like this. It closed at the low of the day, or it looks like it closed at the low of the day. It closed at 127, low is 126.94. If you're long Adobe, I wouldn't let it get much lower than where it's at right now because it's at risk of coming back down and filling the gap. There are rules about Bible gap ups, and a Bible gap up that closes at the low of the day is not the most attractive one to take. Not bad if you were already in it. NetEase sort of pulling back some. Orderly had a positive day on Friday. This has been a big leader in this market. You can see on the weekly chart. Weekly chart looks like, you know, is that a flag? And that was a bottom? Might be. So this might be something to look for a breakout to the upside. Momo. Momo sold off hard on earnings back in November, down to the 200. But since that time, it's up about 80%. Continues to go higher. It's up many days in a row. Great earnings per share growth. In demand. I do own Momo. And Viva, I wish I owned, broke out to new highs on Wednesday and Thursday. This is a stock that I don't know why I don't own it. It's now at a new all-time high, which means, as Dan Fitzpatrick likes to say, anybody's holding it, it's a winner. Because you couldn't have bought it at a higher price unless you bought it on Friday at the end. So Viva looks good as well. And that was in a group of application software. So we've got 1, 2, 3, 4 technology names in the top 6, and then banks and REITs. Although I question the bank and the REITs, I think they're being driven by the reindexing. Medical devices, these are winners in the repeal of Obamacare because they had a device tax. Penumbra, don't know anything about it. When I see a kahuna, a pocket pivot off the 17-day mobile breakout from a squeeze, Bible gap up, everything looks green, doesn't make money. I'm a little bit intrigued by the chart and the strength in the chart. It's an IPO setting a new high. If you like chasing IPOs, it's got good revenue growth. This looks interesting. Up on earnings. Zimmer Biomet, a lower risk play. Certainly bongos are green. Mobile breakout from a squeeze, pocket pivot, kahuna. Big move up on Friday, so I want to find out why. Go down to FinViz and see if there's something happen with Zimmer. Looks like it had its earnings come out as well. But that's a strong move there. Look at the group strength. This is one that's expensive that you might want to look at. Massimo, what a nice run up here. Pulled back here down to the 17th. A little bit extended. Notice how high the high jump bar is. Edwards Life Sciences. This used to be a great stock, and then it sold off. Of course, it sold off after I covered my shorts. I think I got this move here and said, I'll take my victory off. And then, boom, it got clobbered. Big uptrend. It's in the penalty box now. I would not be going long Edwards Life Sciences, but I probably wouldn't be going short here either. Stryker, a nice leader here as well. This is a group that benefited from the repeal of Obamacare, potential repeal. Several food and drug stores look good. This is Sprouts Farmer Market. I don't like the earnings per share growth. It's been in a long-term downtrend. However, two kahunas, huge volume, pocket pivots, out of a squeeze. Let's look at the weekly. Trade above 23, 20. Let's see what this close at. Over 22.50 might be interesting on this. This has now got a weekly bongo, has turned green. Ian taught me when I start to see a number of kahunas occurring in a row, lots of pocket pivots to pay attention. Let's just make sure nothing big happened besides earnings or anything like that on Friday. Price momentum supported by strong fundies. Nope. Kroger's, Walgreens Boots. Most of these don't look very good, do they? So Sprouts Farmers Market does look interesting. Mortgage and finance, some of these have some great dividends. Speaking of which, 12.5%. Looks like a big range here. It's not a big range. A couple of kahunas breaking above the 50 and new bongo daily and weekly are green. Good earnings per share growth. Small PE, big dividend. CYS Investments. New residential. A lot nicer looking chart. Add a new high, at least from here. Pocket pivots, everything is green. Pays a 10.8% dividend. Fidelity National Finance pays 2.6. Chimera looks a lot like the second one we showed you. Pays a 10.1%. Annaly pays a 10.9. Two Harbors pays a 10. Some of these are good-looking chart patterns, and they pay great dividends. Maybe something to look at. Generic Pharma. It's driven by this one stock, and I think they've got some commercial products. Take a look at what happened here, because I remember seeing something, but I can't remember what I saw. Must be going senile. So they have some gene therapy, which is not a generic product. I don't know if this is miscategorized. We had some positive data. It's an IPO, trading at all-time highs. This is a story stock. I get nervous with this. It looks beautiful here technically. Bible gap up, sort of out of a cup. Tried to handle, broke out. Bible gap up, mobile breakouts, kahuna. It makes no money. It has no earnings. It's far away. It doesn't have much daily volume. I think I'll pass. And the volume was 3 million on a daily, which is 8 to 9 times normal volume on this stock. I'll look at a couple others while I'm here. Steel producers actually had a good, I won't say week, they had a good Thursday and Friday. Although they pulled back some, they gapped up a lot on Thursday, gave up some. Here's Steel Dynamics positive on Friday. They're looking for the go-ahead on the wall and on the pipeline in Buy American. Steel Dynamics. Nucor did have a gap up that held. Didn't do much on Friday. U.S. Steel. Now, the funny thing is sometimes you just get lucky. I had some near-the-money calls on several of these, and because of the action on Wednesday, Thursday, Friday, they all turned positive and made money when a couple of them were losers. But, you know, that was luck, and I probably was overweighted in steel. But steel still looks like it wants to go higher. In fact, let me just point something out on U.S. Steel. See, my problem is, although I'm a technical trader, I'm a sucker for great earnings growth. And look at the earnings per share coming into U.S. Steel. But maybe I shouldn't be looking at that. I wanted to also comment on gaming stocks. There are many different ways to rank. I rank short-term momentum, but several of these I thought were attractive. There was some Las Vegas Sands for Wynn Resorts rumors out there. I'm sure it'd be interesting to see if that would happen. But Wynn's been in a horrible downtrend going sideways since April of last year. Did have a bit of a breakout on that rumor. There's also improvement in Macau. More interesting to me are the next two. MGM pullback to the 200, had a kahuna pocket pivot. It's got earnings coming in. This looked like it wants to reverse. Look at the group strength. But more importantly, if you want to buy something that pulled back and now looks good, MPEL, which is tied to Macau, which appears to be recovering. Look at all these kahunas in a row. This led to a buy on Thursday. If I look at weekly on this, you could see like Wynn, long-term downtrend moving. These were mostly down because of concern about Macau. You're about to lap some pretty weak same-store sales for Macau. And when that happens, you might see these things benefit and rebound. Next, I like to look at a couple of my favorite scans just to show you some of the power of HGSI. Today I want to look at the designer. Within the designer, it's kind of like a file cabinet. And the file cabinet has three sections. You have one file cabinet section, which is for reference groups. So all these major industries, components of ETFs, index components, these are automatically updated and controlled by the program. So the program will automatically fix the S&P 500 moving around. It's been funny, it's been more than 500 because of various Google spinouts. So these you don't really do anything to. George and Matt and the rest of the HGSI team manage that for you. Jumping down to user groups, these are groups that you may complete. So one thing that I did is I built an all energy. And if I look at momentum, I see that equipment and refining are outperforming. And then Permian, Bakken Shale, these shale stocks are at the bottom from a momentum performance. And so I can actually break energy up. And each of these, by the way, I made my own little index groups of what's in Bakken, what's in Granite Shale, what's our natural gas, to get an idea to break out when I see energy's weak or strong, what's weak or strong. But these are my own. This Woodward and Brown user groups is something that comes from Ian, well, not Ian's past, but Ron Brown, updated on a frequent basis, and he does a great job of putting important lists together for us. He also has some great web education programs. And then the smart groups are what I want to highlight. These are scans that are done every time you update the program. And they're preset scans, and some of them are really good. So for example, Dave Ghilardi has sprinters. And so sprinters would be stocks that are fundamentally and technically strong. And sometimes all I do is open up this and go through the top 10 or 15. So if we just looked at these very quickly, let's see, we find good stocks. Here's NVIDIA. That was my first stock we looked at. Here's Nutrisystems, a leader. Eagle Pharmaceutical in a nice uptrend. Central Garden Pet. Lumentum. MKS Instruments. Cabot. Central Garden. Nanometrics. Do you notice anything? Inogen. E+. Coherent. Ultratech. KLA 10 Core. Every one of them is in a nice uptrend, lower left, upper right, strong fundamentals. This is a great place to start searching for. How about in Ian's list? Best of Woodward and Brown. And when I identified here and hit warehouse, it moves it over here. And these were some of the best of Woodward and Brown stocks. Are there anything here that look good? Here is TAL Education, lower left, upper right. I'm not going into deep dives. I'm just showing you is that you have some good-looking stocks: Nutrisystems, NVIDIA, Massimo, Momo, Lumentum, Arista, Acalero we looked at. So you get great stocks, both technically and fundamental. Okay. How about I like buying cheap stocks? I can do the same thing for stocks under 15. We'll just look at a couple of these. Network Security, Scorpio, Amicor, Platform, Aegean Marine, Golden Ocean, Acalero again. So he's done the work for you by developing these scans. There's a lot of different lists. How about under my name? 3X in an uptrend, one of my favorite places to look. I find that now with the sector, with the S&P rebalancing, that's probably why there's so many here. Usually there's 3 or 5, in which case I might look at the 5X to see, because I know that when there is a 5 times increase in shares traded, something's going on. And it's interesting, a lot of banks. So unless maybe a lot of them moved around, here's Columbia Bank. That doesn't look that exciting, but remember I said the regional banks all look that way. Look at the volume there. And let's just go more info from the web. Yep, doesn't really tell you what's going on. All right. Other ones to point out that I like a lot are my pullback to the 50-day moving average. For those who were here last time may have remembered that let's just bring that over here. Let's open this up. Now, I don't buy index that are artificial, but this is the pattern I want. A stock that's in a clear-cut uptrend, pull back to the 50, and then breaks out with momentum with a kahuna, great, a pocket pivot, mobile breakout from a squeeze. Last week, I gave you one of my stocks, CLVS. Let me pause this for a second. All right, I'm back. This is 310, looking at Clovis. And notice my pattern. Uptrend, pullback, momentum. Kahuna, pocket pivot, mobile breakout from a squeeze. What I probably would have told you or should have told you is I put a buy stop above that PSAR and not take the trade until I get it moving up above its close. I don't love the earnings. It's one of my stocks potentially to be taken out, stories in biotech, which I talked about last week. Here's Monday, and I got filled. Now, I might be disappointed because it really didn't do anything. It actually lost a little bit on Monday. Let's see how much it lost. Probably as much as it made on Friday. So you might have been mad at me if you took the trade. Probably not, because you're big boys and girls and know it's your responsibility. But nothing has negated why I took the trade. My stop would be sitting here somewhere under the 50. And then, boom, Tuesday, Wednesday, Thursday, Friday. So I'd probably be out of it right now after this candle. But what you had you taken my suggestion and you went long when it took out the PSAR dot. So let's just run it from high of the day to the close on Friday. You would have been up 14% or $8.80 in 4 days. This is a pattern that I love. It's a pattern that I look for. And the reason why I brought this up here is to show you that I've actually built that into the program. So let's just look and see if these fit my pattern. Uptrend, pull back to the 50, kahuna. It looks just like NVIDIA. Okay. Not an uptrend. Short-term uptrend, it's above the 50, pocket pivot, kahuna. 6% dividend. MGM, uptrend, pullback, almost to the 50, pocket pivot, and a kahuna. Brown and Brown, that looks interesting. Uptrend, sideways, pocket pivot, kahuna, out of a squeeze. So I have a whole, none of these are not necessarily all winners, but they're all my pattern. And this is one of my favorite scans to look at on a nightly basis to see if anything pops out as something I want to buy. Where's my next Clovis going to come from? Another one of my favorite patterns is stocks that are squeezing right below the PSAR dot. So I'm looking for stocks and uptrends that are going sideways in a squeeze that are trading right below the PSAR dot, similar to what Gilead was. Why do I like that? Because if it trades up on Monday, Nuvasiv will trigger a Wells Wilder PSAR reversal buy, coming out of a pocket pivot, a kahuna mobile breakout from a squeeze, positive kahuna, and it makes money. So this should find stocks that are not overly extended, because to be squeezing, you would think they have some sideways motion, and they're right below a buy point instead of already broken out. That's Nuvasiv. Sherwin-Williams, uptrend, sideways, momentum coming in, close to a breakout. Kulik and Sofa, upwards, sideways, close to a breakout. So these are scans that I've created to help me cut down my time of work to find. Now the good news here is these fire for you every day, every hour when you run an update of the program. Morales and Catchers, Bible gap ups. Last week they worked well. So this shows you the stocks were Bible gap ups. Now you notice that's the green bar right there. That you have to know how to trade Bible gap ups to know if you want to trade them or not. This one looks interesting here, 5 and 9, Bible gap up off of the 50 with a couple of kahunas, mobile breakout squeeze, Bible gap up, trade closed near the high of the day. That's an interesting one that I might look at. Kratos, Lion, Dean Foods. So these are pre-built in. And what about pocket pivots? We got pocket pivots galore. If you're a pocket pivot person, you can find all the stocks that had a pocket pivot on that period of time. I'm just curious. I saw this one up here. Close, but not yet. All right. So that's some of the scans that I look at. Those are done for you automatically. I didn't need to open it up here. I could have just clicked on these individually and opened up a chart as well. All my charting templates are also included at no charge in the program. I'll finish with sort of looking at my buy list for the weekend. So it's just my industry group. I've got a number of REITs. This is my favorite one. I owned this before. It was one of my stock picks of the week last year. We had a nice run. This is Cyrus One. They host technology. Notice the earnings per share growth is massive, pays a 3% dividend. This was the time to buy it. Mobile breakup from a squeeze and a kahuna and a pocket pivot. It's not extended from there. I still like Cyrus One. Independence Realty Trust. This thing is just going sideways, but it had 3 kahunas in a row. Mobile breakout from a squeeze. Pays a 7.7% dividend. I like that one a lot as well. Semiconductor devices. We looked at several of these. Amacor Technologies, a low expensive one that is in an early uptrend. Semiconductor manufacturing, the Kulicke&Soffa stock is there. That Mobile Telesys telecommunication stock is there. MPEL and MGM. Viva. So these are some of the stocks that made my potential buy list at Nuvasive. And if I want to look lastly at the filtered buys, the ones that were my best performers last week, just very quickly go through these. To be a filtered buy, you have to meet both HGSI criteria of what I like, as well as John Person's criteria. So here's Aspen Technology, lower left, upper right, bit of a sideways resting period, mobile breakup from a squeeze, pocket pivot, and a kahuna. Doesn't make any money, doesn't pay a dividend. Anheuser-Busch, Bud, you had a gap up here, a couple of gap ups, lots of kahunas and pocket pivots, 2.9% dividend. MGM we already looked at. Best Buy, an interesting pattern, uptrend, sideways on the 50, had a pocket pivot and a kahuna and a mobile breakout squeeze. It's hard for me to buy a electronics retailer. Think Cons, think HR Gregg, think Circuit City. They all got one thing in common. They all died. But what a beautiful looking chart pattern. I'll set a PSCR reversal. CATM, I think they make ATM machines. I'm not certain. Why did I like this? It's in the Dow trend. You had a high close doji on Friday on the daily. On the weekly, you had a high close doji. If I go into John's stuff in TradeStation, if I didn't kill it already, oh, I got to get into it. Actually, here. Show you what I was seeing. Here's a high close doji on the weekly with a new PPS buy signal. Here's a PPS buy signal on the daily. The volume indicator is trending north as the OBV. Daily, Bongo, not yet on the weekly. That's a negative. OBV's trailing a little bit on the weekly. This is clearly a stock that's sold off, but to me it looks like it's got upward momentum. Let me show you anything else that really popped out at me. If you want to find yourself a utility, 4.8% dividend, certainly buying it at the bottom of its range. High close doji on the daily, pocket pivot, kahuna, looking at it on a weekly. Also a high close doji and popping into TradeStation and looking at National Grid. And you could see a high close doji on the weekly, daily, and weekly bongos are positive coming out of a daily squeeze. Lot to like on this chart as well. So this is what I do. I scan and scan and scan. I build a relatively, I only do this part on the weekend. Scan, 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 and scan, and then I build a very robust watch list, which is my consolidated buys, which represents 900 securities. I drop it down to $5 and 250,000 shares. Actually, I think now it's 5 and 500. And then I look at every one of those charts, which was 481. I supplement those with the scans that I showed you. And based upon the charts, I end up with a buy watch of 51. This is a very long process. During the week, I don't do the 500 charts. I do the scans. I look for certain patterns. But what I also do is I take my buy watch, which is still a lot of stocks to watch. I stick it in to a TradeStation radar screen. And let me get the right. And basically I'm monitoring for both John Person's high close dojis, low close dojis, PPSs, but I'm also monitoring them for viable gap ups. So I know we had some this week. Let's see if I can find one. here's, no, that didn't. These are only in the stocks that I monitor. And I don't monitor every stock. If I'm making you dizzy, I'm making me dizzy too. All right. I pick up gap percent, volume percent. If you meet both, you get a Bible gap up. None of the stocks I followed had one, but I'll see early on Bible gap ups, pocket pivots, Mobo breakout from a squeeze, Mobo breakdown from a squeeze, those stocks that are squeezing, green candle low, red candle highs. I get those during the day. Notice here I have my earnings, so I know when stocks have earnings coming. And I guess that's it. So on that note, I'm going to say goodbye. Hope to see some of you this weekend in Orange County. Almost certainly there'll be no video this coming week. Thanks, everybody.